Okay, welcome back to another lesson. In this video, we are going to look at a question that was tested in the year 2023, April 2023, for ATD students and is on principles of taxation. We are going to look at question number 3 and get to have the solutions of what was expected to those students who are sitting for this exam. So, question number 3A reads, identify 4 transactions where use of personal identification PIN, personal identification number, that is PIN, is required. Where do we need KRA PIN in our business or day-to-day transaction? So these are the areas where we require KRA PIN. 1, you require KRA PIN during registration of titles. Registration of titles and stamping of instrument. And stamping of instruments. You require this when you want to get or transfer your land or acquire a new land. You need KRA PIN. When you need approval, or let me say during registration of business, registration of business names, during registration of business names, you require KRA PIN to register business. Also, when you are doing registration of companies, registration of companies, you require KRA PIN. Then, when you want to do underwriting of insurance policies, you require a KRA PIN. When you want to get trade licensing, when you want to do approval of development plans, and payment of water deposit and payment of water deposit. So I'm not saying that these are the only areas. There are so many areas that you require use of national personal identification PIN, KRA PIN for that matters. Part B, you're told explain 2 circumstances under which a tax refund may arise to a taxpayer. When do we get a tax refund? That means you want to get the payments you made to KRA back. 1, we're talking about overpayment. When there is an overpayment by both individual, and corporate taxpayers. When you have made payments beyond what was required, it is called overpayment. Then in this case, you can get tax refund. Another situation is when there is over-deductions of payee. The accountant may apply wrong computation. So when you have over-deductions of payee, you get refund. And this is done by the employer. So those are the 2 cases where you require a tax refund. Next, we are told that Safi Manufacturing Company started its operation on 1st January 2022, producing soft drinks for the local market. The company acquired the following assets on commencement of its operation: factory buildings, we have plants and machinery, file cabinets, motor vehicle, photocopier, LCD television, visitors chair, trucks and trailers, computers, labor quarters, parking bay, non-processing machineries, calculator, and water pump. Additional information: motor vehicle comprises of pickup to supply soft drink to the local market. And under part 2, the cost of trailer was 1.4 million. The cost of trailer was 1.4 million. You are told compute the investment allowances due to Safi Manufacturing for the year ended that 1st December. You see, this one were acquired in 1st January, and we need at the end of the year. So we begin by saying that this is Safi Manufacturing. Safi Manufacturing. Safi Manufacturing. Safi Manufacturing. Computation of capital allowance. Computation of capital allowances. Computation of capital allowances. Now, we start with investment deductions. This is for the year 2022. We begin with investment deductions. Investment deductions. Investment deductions, we shall have item, then we need to have its qualifying costs. Qualifying costs. Then we need the rate, we need amount, and finally we need residue. And let me squeeze this one so that it can fit here. Here we need the rate, then we need amount, and finally we need residue. Now, here, when you're talking about capital allowances, you're talking about allowances given to those investments that take long before they start operations. And in this case, they should be investment for the purpose of manufacturing. Investment for the purpose of. Now, investment deduction here, the first one we have here is factory building. Here we have factory building. Factory building, the qualifying cost here is 29,500,000. That is the first thing. Factory building. Then we have plant and machinery. That is another qualifying cost. That is plant and machinery. Unless this plant and machinery are specified otherwise, they remain for the purpose of manufacturing. Plants and machinery, we are moving in order here. File cabinets, this one. File cabinets, this one will go to wear and tear. They are not there, we can't bring them to investment deduction. Motor vehicles will go to wear and tear. Photocopier will go to wear and tear. LCD television will go to wear and tear. Visitors' chairs will go to wear and tear. Truck and trailers, wear and tear. And that unless they are used for the purpose of manufacturing. Truck and trailers, we are going to take them to wear and tear. Computers, wear and tear. Labor quarters, this is industrial building deductions. Parking bay, this one is investment deduction. Perimeter walls, parking bay, these are investment deduction. So we have parking bay. Parking bay. Parking bay of how much? 2,960,000. Parking bay goes to 2,960,000. Non-processing machine. This one is not used for the purpose of manufacturing. We take it to wear and tear. Calculators, they go to wear and tears. Water pump. Water pump, this one, you see water tank will go to wear and tear, but water pump is an investment deduction. Water pump. Water pump is an investment deduction. And the water pump is 1,280,000. Now, we go to, now I want you to look at this. We need to look at their rate. This one is provided in your first page. If you go to the first page, here, you have been given capital expenditure, and here you're talking about hotel buildings, 50%. And you're told the residual value 25% per year on equal installment. So here you have residual value will be 25%. Building 50%, hotel buildings 50%, petroleum and gas 50%, education hostel 10%. So you can see machinery here is 50, machinery but used for manufacturing 50%. The first year of use. Hotel investment, then you are told residual value is 25% per year on equal installment. Now, when you want to distribute residual value, we shall make use of 25% the following year. So here we are, because I'm dealing with only 1 year, I will not go to that other details. Now, here I'm talking about 50%. So the rate here is 50%. The rate in percentage, of course. This is 50, 50, 50, 50. And how much is the amount? So 29,500 times 0.5. This give me 14,750,000. Let me put them in thousand. Of course, the residual value will be the same, but when you come to the next year, you're going to take 25% of that. This one is 6,400. The same here. This one is 29,60 times 0.5. 1480. 1,480,000. The same residual value. Here it is 640. When you add all this plus 640 plus 6,400 plus 14,750. So the capital allowance on investment deduction will be 23,270. Of course, this one are in thousands. So amount capital allowance here, amount here will be 23,270,000. Now we go to the next item here. The next is industrial building deductions. We have industrial industrial building deductions. Industrial building deductions. We have item, qualifying costs, rate, amount, residue. Now, here the industrial building deduction here, we only have one item here, and that item is labor quarters. There is no other. This is labor quarters. So labor quarters. Labor quarters qualifying cost is 3.6 million, and you need 50%. So this is 1,800,000. The same thing, 1,800,000. Put this one in 1,000. Put this one in 1,000. Good. Having done this, we move to wear and tear. This will be our last. We go to wear and tear. Wear and tear. So wear and tear, we shall have the assets. Here we go to wear and tear. We shall have assets. We shall have assets. And then you have class 1, which is at that 7.5%. We have class 2 at 30%. We have class 3 at 25%. Then we have class 4 at 12.5%. So let's move on and see this. From the additional information here, you are told that the motor vehicle comprises pickups to supply soft drinks to the local market. Pickups, those kind of motor vehicles, are classified in class 3. So here we have motor vehicles. Motor vehicles. Those ones are in class 3. And you are told is 6,200,000. Those ones are in class 3. Now, we move on. Photocopiers. This photocopier, LD television, calculators, and the rest, and computers are all in class 3. Here we have photocopier. Photocopier is in class 3, 140,000. Then we have computers. Computers are also in class 3, 400,000. Then we have calculators. Calculators are in class 3. Calculators. These calculators, computer scanners, all those are in class 3, 60,000. We have LCD television. LCD television. Those one are in class 3. Now, trucks and trailers. Trucks and trailers are in class 1. Trucks and heavy machines. Here you are told that the cost of trailer was 1.4. That is 1.4 million. Yeah. So here we are having trucks and trailers. So you need to differentiate between these two. Trucks, the total is 9.2 million. So 9.2 million minus 1.4 million. So the trucks are heavy machine, that is 7.8. Here we are going to have trucks are in class 1, 7,800,000. 7,800,000. Trailers are in class 4, 1,400,000. Trucks are in class 1 because they're heavy machine. Trailers are in class 4. Now, what else have I not handled here? What else have I not? I've not handled file cabinets. File cabinets are in class 4. We need to have file cabinets. File cabinets. File cabinets are in class 4, which is 680,000. We have visitors chairs. Visitors chair, all furnitures, visitors chair. Furnitures are in class 4, 50,600. And then we have non-processing machine. Non-processing. This one is not used for the purpose of manufacture. Non-processing machine. So they cannot be investment deductions. So they are brought here in class 4, 2 million. I think I've captured all the items as they were provided. Here we have water pump. I've captured that. Calculator, non-processing machine, parking bay, computers. I've captured all the items as they were given. So let's get the totals. We go and get their total. What is the total here? Here we have 7,800,000 remain the same. Here we have 140,000 plus 400,000 plus 60,000 plus 80,000. This gives you 680. This is 680,000. Here we have 6.2 million. And in this class, we have 1,400,000 plus 680,000 plus 50,600 plus 2 million. This gives me 4 million. Here, this gives me 4,130,600. Now we apply our rates. What is the wear and tear? Wear and tear. Wear and tear. This is 7.8 million times 7.5. Wear and tear here is 2,925,000. Here 30%, 0.3 times 680,000. This is 204,000. This is 25%, 0.25 times 6,200,000. This is 1,550. And finally, 41,600 times 0.125. This gives me 516,325. Now deduct this one and you have what we are calling written down value. Written down value. 7,800 million minus 2,925,000. You get 4,875,000. 680,000 minus 204,000. This gives you 476,000. Then 6.2 million minus 1,550,000. This gives you 4,650,000. And here we have 4,130,600 minus 5,016,325. This is 3,614,275. Good. That's how you are to score your 12 marks, by looking at these capital allowances, and you get yourself the 12 marks. Otherwise, we stop there. We meet in our next video. Goodbye.